Good afternoon, ladies and gentlemen. My name is Chinmay Rahamdale, and I am a research intern at Institute of Chinese Studies, New Delhi. It is a great pleasure to extend a warm welcome to all to another edition of ICS Wednesday Seminar. The title for today's seminar is Slowdown in the Chinese Economy: Views, Perspective, and Narratives. In recent years, the Chinese economy has slowed down in the terms of growth rates, especially after the COVID-19 pandemic. This has prompted a variety of commentaries on the reasons behind the slowing down and its implication for China and the global economy. Some of these commentaries follow from other narratives in the earlier decades predicting an impending collapse of China's economy. This presentation picks up from Professor Barry Naughton's presentation at the Gargi and V.P.Dutt Memorial Lecture, which was held on 3rd April 2024, titled China's Economic Slowdown: Structural, Cyclic, and Systematic, and examines a few other hypotheses. This seminar will identify the problems with these arguments in the context of recent performances of other economies and changing geopolitical conditions post 2020. The speaker for today's seminar is Dr. Sriram Natarajan. He is an adjunct fellow at the Institute of Chinese Studies and an independent researcher on development theory, food security and nutrition, and Chinese agriculture. He has consulted for Food and Agriculture Organization and the International Labour Office. He has also lectured at Jawaharlal Nehru University and University of Delhi, apart from all these activities. The chair for today's seminar is Professor G. Venkatraman. He is a professor at the Indian Institute of Management, Indore. He has also an honorary fellow at the Institute of Chinese Studies. Professor Raman has recently completed his Fulbright scholarship at the Shar School of Policy and Government, George Mason University in Virginia, USA. He has obtained his doctoral degree from the School of Government, Peking University, Beijing. His recent publication is a co-edited volume on BRICS titled Locating BRICS in the Global Order: Perspective from Global South. He has also co-authored case studies on Indian businesses in China. Now, before I hand over to the chair, I would like to ask all the participants to follow a few housekeeping rules. All participants shall be muted during the seminar. Questions will be posted in the chat box along with your name and affiliation. Alternatively, you may use the raise your hand option during the interactive session. You shall then be called upon to unmute yourself. Thank you. I now hand over to the chair. Over to you, Professor Raman. Thank you.
Thanks a lot, Chinmay. Very good afternoon to all of you. Thanks a lot to ICS for inviting me to moderate this very important seminar. In fact, the last time I met Dr. Sriram physically was in my house in Beijing, somewhere around 2006 or 7. And nearly after 18 years or so, I'm actually interacting with him, and it's quite interesting that we are here today, virtually though. So let me, state how are we going to go about it. I propose to, have this session for 75 minutes. After laying down initial remarks, somewhere, some 7 to 8 minutes or so, I would ask Dr. Sriram to make his presentation, which will be 30 minutes to 35 minutes max. And then we would be asking participants to raise their questions, and I'll be requesting Dr. Sriram to respond to those questions. It would be great if those who are raising their queries keep it very brief and short. You're requested to raise questions rather than deal with various opinions and commentaries. That would be helpful in completing the session in time. So with these few words, let me lay down a certain kind of a background against which we are discussing about the slowdown of the Chinese economy. Well, the slowdown of the Chinese economy might be something which the world is talking about, but ever since China's access into WTO, the frenetic pace at which China has grown, it's kind of made itself indispensable in international trade and commerce, is a fascinating story in itself. In fact, only 6 years after China's access into WTO, there was a book, the bestseller published in 2007, and the book was titled A Year Without Made in China. In the that particular book, the author basically, tries to see if their family can survive without consuming any good made in China. And finally, she comes to the conclusion that it may not be impossible, but it is absolutely difficult, to stay without made in China goods. So therefore, the book talks about how this, potential of China is going to unfold if it continues to grow at a frenetic pace, which it has done over the years. So this kind of, rapid development of China as a manufacturing powerhouse has had many positive benefits. So, for example, it has made cheaper goods, quality goods, accessible to many households all over the world. But the way the globalization process has unfolded, it has also led to serious, creating uncertainties, fear, and even anger in different parts of the world, especially in the United States. Now, the China rice story has been such a fascinating one that it has forced or compelled many scholars to observe that this kind of growth of China, the China growth story, has taken even the best of experts by surprise. So, for example, Priya Basu, one of the former World Bank and IMF economists, basically she has been quoted once saying that over my career, I saw developed countries taking multiple approaches to open up in developing countries. I never thought I would see opposite happening. So therefore, if in the last 20 years or so, we see that China's value-added exports have accounted for more than 28% of world's total. By 2015, 30% of China's exports could be classified as high-tech exports, leading to development of very high qualities, supply chains in which the local manufacturers in China became stronger by the day. Now, as these developments have unfolded, and we are today talking about slowing down of Chinese economy, we need to look at this in terms of many things one can look at this whole picture, but two things are very, very critical. Even before the slowdown story started unfolding, it was a known fact that in China, production has always surpassed consumption. And so therefore, exports were always a very, very significant component. Now, whether it is the slowdown or whether the overcapacity issue, these issues have only further exacerbated, the way the China export story, impacts the global economy. So, for example, and to add insult to injury, unstable foreign demands and trade conflicts have made this whole situation worsen. So the question of economic slowdown, therefore, needs to be looked against this larger background. Now, we are already witnessing today the impact of Chinese slowdown. So, for instance, Chinese imports of consumer products has significantly come down. And so, therefore, in coming years, we will see that it getting translated to lesser income for those countries who export to China. So, for instance, it's a big worry for US because US alone exports 150 billion US dollars to China. Now, in the case of a slowdown in the Chinese economy, because Chinese buying capacity will decrease, so therefore US will get impacted. Now, this will also translate to exchange rate, fluctuations because Chinese economic slowdown means heavy pressure on the Chinese RMB, the Chinese yuan, which means that once that happens, Chinese exports are going to become more competitive in international markets at the cost of other competitors. And so therefore, that is going to further lead to trade tensions. And finally, given that in the Western markets, China is facing a lot of tariff barriers, non-tariff barriers, and given that it is having a major slowdown and also associated problems related to the overcapacity, China is now going to increasingly increase its outward foreign direct investment in non-Western markets, especially in those countries where there is a growing middle class. Now, this is a very important point to remember, because this is also motivating China to play a much more critical role in its claims to become leader of global South. So this issue is especially important for India, because India is also contending along with China for leadership in the global South. So these are some of the dimensions which we need to take into consideration as we are talking about Chinese economic slowdown. So without further ado, with these initial comments, now I would like to request Dr. Sriram to come and make his presentation. Dr. Sriram, please.
Uh, Thank you, Venkat, for the very useful introduction that you have provided. But first of all, thanks to Alka Acharya and the ICS for inviting me. It's a great pleasure to be back with the ICS family and to contribute a little bit of what I have been observing and trying to comprehend, especially with regard to this whole narrative about slowdown of China and its implications and the effects that it will have on global trade, global development, and global growth. Now, why is this? What do I do now? The screen is, I am seeing the Zoom screen. So, uh, you can see the outline on the screen, which is first I take up some newspaper narratives that have been building up about China slowdown. Hello, can you hear me? Hello, am I audible?
Yes, Dr.
Yes, sir,
Natarajan.
you're audible.
Yeah,
Can you
very
share
much,
your
very much.
screen, please?
Absolutely fine.
Yeah, is it? Can
Or
you
would you
see the
like us
screen?
to share?
Is it?
No, sir, we
Isn't?
cannot.
Oh, I have to
Can you
share my
please share your
screen.
presentation? Yes,
Okay,
sir.
okay. I think they removed the share screen option, and then how do I go back to that? Share screen. I don't know how to share now. It was showing up earlier. Let me close down and come again. Slideshow. Okay.
Dr. Natarajan, we can share it from our end if you suggest so.
Wait a minute. Let me.
Okay, thank you.
When you switched it off, the share screen, what happened to my computer? I mean, I don't know what happened to this.
Just check
Share
if
screen,
the
yeah.
screen share is enabled.
Yeah, the screen share is enabled.
When you switched it off, I think you have to switch it on again, isn't it?
We have your PowerPoint presentation, Dr. Natarajan. We can share it from our end if you say so.
Okay, you do it that way, I think. It's really a techno maze.
Dr. Natarajan, you have to just say when to change the slides and we'll operate it from our end. Yeah, we're
Okay,
just sharing just a few minutes.
I can't see the zoom now. Where is the? Yeah, are you sharing the screen? Okay.
Yes.
You can make it bigger. Go to the next one.
Yeah.
Yeah. No, but it's too big. Is this the one? There's something below that. Ah, uh, say start slideshow and then full screen. No.
the full page is being displayed, Dr. Natarajan. So this is all we have
No,
on the.
I think the problem is that you see this was converted from a Linux presentation to a what do you call, to a Word presentation. So if I say start slideshow, doesn't come there, isn't it? No,
Dr. Natarajan, this is the whole thing which we have on the page. So we can change the
that is
slide.
what I think. It is wrong. I think it is.
Okay.
I think it's not what I had in mind. I mean, this is not what it. This is real tragedy. Yeah. Return to meeting. Yeah. Okay. Now, because this page has more underneath it. So you go back and I will share the screen. Is
Yes,
that
Dr.
okay?
Yeah.
Yeah.
So you want
And
uh, us to remove this slide and then you'll operate it from
remove
here.
remove remove your thing and see if mine
Okay.
is coming.
Thank you. Thank you. We'll do just wait.
So we can see your screen, Dr. Natarajan.
Where is it?
No, earlier we could see it, but now I can't.
Oh, I think you've done something there which is preventing the slides from being seen. Is that so?
Listen, I think we are really losing time here.
Yeah.
Shyam, can you mail your PPT to the ICS?
I have mailed it, but when it got converted from see, I use a Linux machine. Can you see this screen now? My thing. Can you allow my screen to be shown?
Sir, on the Zoom screen, can you see share screen option?
There. Is that okay?
Yeah.
No?
Yes, Professor.
We can
Yes,
see that.
Doctor, we can see
I
it now.
think we'll go like this only. I mean, I'll just start off with this thing. So the outline says that I deal with first the newspaper reports and the narratives that was built up, and then take up four experts on China and examine their views about what this narrative is leading us to. And in the third and the last part, I take up the question of whether is it just China or is it something else that the China news is trying to cover up. And I'm very fortunate that Mario Draghi, the ex-president of the European Central Bank, presented a report on 9th September called The Future of European Competitiveness. And on 17th, which is just last week, he made an address to the European Parliament, citing or basically in an alarmist tone, expressing his displeasure with the way the EU project was going ahead and how bad conditions in the EU were vis-a-vis the US and China. So, without any, since we are losing time, let me move on. Let's look at some very simple statistics about China. And this is a very self-explanatory one. It is the share of China in the world in red, which we see in the last part from 2022 to 23 going down. No, yes, going down from 22 to 23. And the rest of the world is also going down in its share in global economy, whereas the share of the United States and European Union is going up. Japan fairly being flat. This is important to consider in the beginning itself. Now, if we go to the next slide, the latest IMF estimates, maybe just about 10 days ago, they projected that China's GDP was higher than uh, the US GDP in purchasing parity terms. And you can see the difference. It's 35 trillion for China and 28 for the US. And India is not very far behind. I mean, though it's just half of what the US is. Again, in terms of labor force, you can see that China and India account for a very, very large proportion of the global labor force. So even if you put European Union, the United States, and Indonesia together, it is even less than India's total labor force. So this is the kind of equation that we are dealing with, and the slowdown in Chinese economy, since it um, refers to a very large economy in the world, is has been rightly pursued in the newspapers and by economists, though they differ in considerable uh, depth on what the problem really is. There's another last slide on the China's position in the world. We can see that this is a higher threshold poverty level published by World Bank, that is less than $5, $5.5 a day. And you can see China's is roughly about 28%, whereas you see India's is more than 80%. So this is a real imbalance in the whole world. But this imbalance also means a great potential for China to grow in the coming decades. And now I'll take up the first part of the narrative build-up about China's slowdown. These are headlines from various Western mainstream media, how this whole story was built up. I am starting from the recent news reports and going down up to 2019, roughly the time when the narrative started, about China's slowdown, about the problems with China's economy, about how the West is going to face problems vis-a-vis China and economic growth. So here we see the first headline, which is 2024 July 14th. It starts with the discussion about um real estate. That is the focus of this issue. The second one is by Reuters, which is also focusing on the real estate, as we shall see in the next slide, and the effect of this real estate sector, which they have been emphasizing all through, along with many other indicators. So here is this is part of the Reuters report published again in July, sometime in, when was that? That was 23 September. So here we see that the red line is China's GDP, whereas the blue is the accumulated debt of in China. And this report actually, this Reuters report, uh, basically exaggerates the level of debts in China vis-a-vis the GDP by putting together household debt, government debt, and non-financial corporation debt in one picture. Now, this is quite misleading in one sense for economists in general, because this is a technical. There's a technical understanding which is required, and I will give you a small example about that. Suppose you take an individual who has a salary of say 1,000 rupees a month, and this person wants to buy a 10,000 rupee worth a flat somewhere in Gurgaon maybe, and the bank gives the 10,000 rupee loan. So in that year, this person's income, or you can say the GDP, is 1,000, whereas the debt is 10,000. So it is 10 times the income. So this is the way this whole graph conflates what is debt and what is GDP, or the capacity to pay the debt. And this is part of the narrative that was being built up. This mountain of debt is something that appears even in a 2019 news report by our well-known Karishma Vaswani in the BBC. And going to the next one, this is again from the same Reuters report, which says that China's imbalance between consumption and investment is so bad that, this is why it is slowing down, because investments are not generating enough income so that people's disposable income go up and the consumption goes up, as a problem, as a serious central problem in the Chinese economy. Then we have another report in the Financial Times by Martin Wolf, and who is probably a little bit more lenient towards China. This is October 24th. He says that he has a more balanced reporting, in other words. In 2019, he reported that when everybody was saying China is slowing down, he said China is stabilizing. And in the early days of the US trade war with slowing China's trade with US, here he argues that the investment-led strategy, or that its democratic dividend, or the other problems that newspapers are highlighting, are all not really problems. Because, first of all, China was at that time, I mean, in 2022, 76th in the IMF ranking of per capita incomes. And therefore, low capital labor ratios, that is, low availability of machinery capital for every unit of labor, permits an economy to invest more in capital. So he says these are all not the problems. It is the politics that is emerging within China which are going to pose the main problem. Obviously, he is referring to uh, what our Barry Naughton said in China, that there is this new regime of Xi Jinping has brought the party back in focus, and that economic growth is not the priority, etc., etc. We'll look at that later. So these are some more reports, the CNN report. So there are three categories of indicators that China's economy is in trouble: property market collapse, and local government debt being very high, and there is a democratic dividend is not paying up enough, and there is a decline in its contribution to economic growth. And then we have this is slide number 10. Okay. So the New York Times narrative: economy is spluttering, posing a challenge for global growth. And in this report, they argue that um, Andrew Sorokin argues. Anyway, it is the same kind of an argument that, the debt levels are very high. And then we have the next report is by Bloomberg, which is very important because it's an elaborate report on why China is slowing down in July 2023. So the Bloomberg refers to this Japan style malaise. That is, just as Japan stopped growing, or started entering a period of stagnation somewhere around mid 1990s, China is also entering the path, and that this is something that is normal with these Asian countries or non-industrialized countries at various points in time, to experience a sudden slowdown in their economy. But they also say that there is a 5% growth that is possible, but consumer spending is sluggish. But the more important thing is, Bloomberg says that China is nevertheless important for the global economy. And they produce these graphs here, where they say between 2023 and 2028, China will be accounting still for about over 22% of global GDP or growth. India would be around 13%, and United States would be very lesser than that, at about over 11%. And the graph on the right, which is the black one, they project various scenarios and say that China may not catch up with the US as predicted, in 2020, 2030, or 2040, and that the problems in China are so bad that, this is going to be a long dream for China. And then again, you have a New York Times report in 2023. China's rebound hits a wall. And there's no quick fix. Here, the emphasis on de-risking, geopolitical tension, etc. And that's what this one deals with. And the next one is this is a BBC report. 5 reasons why China isn't recalled. Zero COVID is wrecking. Uh, BBC, anyway, if we all know that it is a very state controlled and state funded media, which has a different agenda from what one may expect from a free press. And it, for the first time, points out that Japan's SoftBank is going to pull out of China, and that investments in China are not going to be paying back as much as it did in earlier times. Uh, and they particularly mentioned the SoftBank pulling out of Alibaba, even though we all know, or many people know that Japan is firmly entrenched in China, just as many of the German firms, American firms are so firmly entrenched, and the investments are very high in China that they can't pull out that easily. And here then there is this report again in the FT. China shrinks for the first time. And then very important is that before this report came out, the IMF had already warned that the world global economic output is very bad since the Great Depression, and that so we have the IMF providing inputs about numerical and statistical information which the press catches on and sort of amplifies it in the news. And then this is again another one. So it's a very great concern. This Investopedia is a big group, investment group in America, which also reports heavily on trends in the world economy across countries, and it's the same story that investors are worried about investing in China. There is an overvaluation of the yuan. The global outlook is dim, and then the CNN also chips in with a slightly different version of the story and says that, and by this time we all know that the uh, starting from the Obama administration, the pressure on China was increased, and when Trump came to power, the whole sanctions regime and access to American markets being restricted, and such things keep happening. But interestingly, in the CNN report, there is a quotation. There is something that your then Chinese Premier Li Keqiang saying that there are downward pressures, but China is very resilient and they would be able to get over the problem. So this is again a BBC report saying how China's industrial output, percentage change in industrial output, which is basically the growth year on year, going down to 4.4% somewhere in 2019. So this is a 2019 report. Similarly, the graph on the right, the trade data, which shows that China's trade with the EU and the rest of the world going down. But if you see carefully, the blue line on the right, that is going up. That is China's trade with the ASEAN. Because China had already started readjusting its focus with regard to trade and compensating the loss of markets in the West, gradually reducing markets, focused on the ASEAN countries. And through the ASEAN countries, the same goods get value added and come back to the West. This is how matters worked out. So one of the earliest narratives about China's economy slowing down is by the BBC, and I mentioned about this Karishma Vaswani, whom many people would have seen on the BBC reporting on Asia, on India, China, Southeast Asia, etc. She says that China's economic slowdown is not news in itself. Beijing has already broadcast this for several years, but we should be worried. We should be worried. The reason she gives it because the way in which Chinese economy is integrated to the global economy, it accounts for one third of global growth and of jobs. So there we uh, see what I referred to earlier, the mountain of debt. You see, there is a last line which says that she mentions about the mountain of debt. So these are all not based on very sheer rigorous research or anything, but these are just some kind of representation of data in a certain different manner than what it should actually be reported as. So that basically ends my examination. Some of the newspaper items that appeared in the main Western media. There were many more, the hundreds and hundreds of reports in the newspapers about China's slowdown, and these are all just a sample of what we saw. And this is very important. This is the media narrative about any development in the global economy is quite important, and that we'll come to later when Jeffrey Sachs and others, even Nicholas Lardy, who is another economist on China, mentions about these things. So we take up. I was going to start with Barry Naughton's talk that he gave, which was very comprehensive, clear, going into the very important details of the developments that were occurring in China, in the economy, in various sectors. He talked about the real estate. He talked about many other things, and but his focus was mainly on China, without considering the rest of the world. Now we'll come to that. But before that, let's take Nicholas Lardy, who's another illustrious, famous economist, commenting on China, writing on China. The earliest he worked on was on the agriculture of China. And my own PhD research earlier, I had to rely on his work because he had access to a lot of data, a whole volume of data on China agriculture. And Nicholas Lardy has participated in this event organized by the Center for Strategic and International Studies. Many people in this audience would be aware of what organization this is and institution this is. They do a lot of research. And this is a kind of a roundtable that was held in 2023 August. So Nicholas Lardy focuses on the economic numbers for the first half of 2023. So he is asked a question whether this downturn is structural, cyclical, or both, and then they examine the media narratives. But what Lardy does is basically he contradicts all of them. For example, he says the disposable incomes have grown, wages have grown, and savings have grown. Uh, so where is the problem? Consumption growth is actually accelerating, and he gives clear-cut numbers: 8.4% in the first half of 2023. Disposable income go up, 7% or 6%. 5.5% in urban areas, 7.8% in rural areas. So incomes are rising. And then there was also in the media narrative about deflation, which is a dreadful thing for market economies. If prices start to go down, then the expectations go down and the economy starts going downhill. And but Lardy looks at closely at all the numbers and says that there was a outbreak of swine flu, and we've been seeing this everywhere: bird flu, swine flu, and then culling of a lot of chicken and meat production in many countries in recent times, and even in a decade ago. And a very interesting thing he points to is about the decline of or slowing of private investment, which was about 25% during the COVID year. And he says that in 2022, it was actually more than what it was in 2019. So it is not going down. And further, private investment as a share of total investment in China domestically was still 54%, which is a very high how can you classify it as a centrally controlled economy when private investment is 54% of total investment? So he basically contradicts them one by one, and then he also explains the decline in private investment in the sense of slowing down of it by arguing that the COVID had led to a lot of pile up of manufacturing inventories at the end of 22, and the government had cracked down on the platform economy, or what you call this Uber and Just Eat and all kinds of other internet based retail selling. Their investment had declined by 800 million RMB, leading to no hiring and layoffs and such and thing. So the important thing is the quote that I have put there. He says, let me just say, I think a lot of what we have been reading in the press is anecdotes, individuals who are having difficulty, companies that have failed, individuals who are unhappy with government and party policy. So he basically ends the whole debate and contradicts the whole notion and the narrative that has been built up about the slowing down of Chinese economy. Now I take up another person called Ishwar Prasad. He's a professor in Cornell University, but he is important for this discussion because he was in the IMF for quite a long period of time in probably the China division, and he did a lot of work on Chinese finance and Chinese economy, and he is what you can call as a macroeconomist with from the monetarist side, that is, who give more emphasis to money, finance, banking, etc. But he also says that there is a slowdown of growth, there is a risk, and etc. But I don't. He doesn't feel that any serious collapse or anything is going to happen, and he gives very interesting numbers. He says in 2024 GDP at current prices, current exchange rates, USA, it was 73% of. I think I'm sorry. This is actually per capita GDP at current exchange rates. This was 7% in 1990, and it rose to 73% in 2024. This is the figure that he gives. And he says that it has increased 10 times. Maybe it is just GDP only, sorry. So per capita GDP, he argues that from 2% of per capita GDP in 1990, it went up to 17% of. So this is a vast improvement in what he calls stellar economic performance. And he goes on and says that even though China does not have a well-functioning financial system, it doesn't have a market-oriented system, its institutional framework is not strong, it's not a democratic and open government, which are the basic fundamental necessities according to the dominant economist view, that these are all necessary for any kind of growth to happen in an economy. A well-functioning financial system, markets, institutions, and a democratic government. And he says that instead, China is characterized by unbalanced reforms, weak institutional structure, schizophrenic approach to the role of the market versus state, and strains in the financial and property markets, resulting in volatility. And he accepts that the investment led growth that China followed was quite appropriate given the labor abundance in China and the low capital labor ratios. But his problem is with the public sector, which is dominant. And then he concludes that the China model is um, inefficient and financially risky for investors. And he goes on and he says that there are reforms being initiated to increase the share of consumption in GDP. The service sector is growing and employment growth is emphasized instead of physical capital intensive growth, because employment growth is necessary for consumption as a share of GDP to increase. If there is employment is reducing, then there is no money with people to spend on consumption. And he also mentions about the impressive productivity growth, uh, and but it is dominated by external demand and not domestic consumption. And China relies heavily on technology brought in by foreign firms, and that these characterize what China's growth story is about. And he says he again comes back to there are problems with the Chinese economy, debt levels specifically in real estate very high, but he mentions that the external debt of China is very low. It's only 16% of GDP, and only half of this is in foreign currencies in that sense. So he basically again rubbishes the claim that there is no alarmist attitude required to consider China the slight slowdown in Chinese economy over the years, and China can easily overcome or avoid a banking crisis, as he puts it, or currency devaluation, and therefore navigate volatility without risk of collapse. These are two different views. Nicholas Lardy is a different kind of an economist, and Ishwar Prasad is a different kind of economist. He is more America. Both are from America. All of them are actually, and but they have slightly different views on that. Now we go to the Barry Naughton's thesis, which we already heard in very great detail when he gave a talk in April. The most important uh, feature that has emerged in the Chinese polity is the party coming back in command. So he calls that the system shift and a greater regulation of the market and control of market activities. He was predicting a 5% growth, even though household sentiment became low during the COVID years. It has not improved very well, but the party is more pragmatic and responsible. And he especially mentioned about how China was probably the only country that navigated very um, effectively out of the 2008 global financial crisis following the collapse of the Lehman Brothers. And he also mentioned about productivity increases, the investment in education. He talked also about the little giants and the investment by the government in new startups, especially in the technology to for purposes of innovation. And the innovation strategy, according to him, is very significant. And even the European countries, as you shall see in Mario Draghi's report about the EU, you'll see that they also have realized that this is very important, because technologically Europe is lagging behind. But Norton's presentation is comprehensive, but it focuses only on China. But that was the scope of the lecture, I guess, and this was time and other factors did not permit him to take up a discussion about China. Now we come to what I consider to be the most open and clear description of this whole issue of why China is slowing down, or is China slowing down? What is the reason behind that? And this is provided by Professor Jeffrey Sachs, whom many of you may be aware of. He's a professor at Columbia University, and he works with the UN. He probably is paid $1 a month for being a special advisor to the UN Secretary General. He is a big advocate of this um, sustainable development goals, and he's well respected among economists. He's a very well informed but among the economists, he's one of those who are very well informed about geopolitical developments, and he talks a lot about what's happening in these days with the U.S. foreign policy. Sorry. So this important thing. This is the first quotation. Much of the slowdown is the result of U.S. measures that aim to slow China's growth. Such US policies violate World Trade Organization rules and are a danger to global prosperity. So this is one of the most bold statements that he makes. And he says that this is from the US's playbook, which is a very familiar one. They used this with the Soviet Union to block access to advanced technology. And more importantly, what he says, what has been overlooked by even scholars of, of Japan and Japanese economies growth. He says that during the 80s and the 90s, Japan was a technological powerhouse in semiconductors, consumer electronics, and automobiles. And according to the foreign policy hawks in the US, this was considered to be too successful. At the same time, when Ezra Vogel, who is also a very familiar scholar in ICS circles, came out with this book called Japan as Number One. But he says that this policy of US, whenever US perceives a country as a threat to either to its growth, its technological power, or is any other kind of geopolitical standing in the world, they take measures to cut down these countries to size. So he points out here, in 80 to 85, 1980 to 85, export growth of Japan was 7.9% per annum. This fell to 3.5% between 85 and 90, and further to 3.5%, 3% in 90 to 95. Japanese companies fell into financial distress, and then there was a financial bust during the early 1990s. And so he says this, that in the mid to late 1980s, US politicians limited US markets to Japan's exports via the so-called voluntary limits agreed with Japan, and pushed Japan to overvalue its currency. And he gives numbers here: 240 yen per dollar in 85, 128 yen in 1988, and 94 yen to a dollar in 1995. This means that the yen is becoming more stronger. We have to pricing Japanese goods out of the US market. So Japan went into a slump and growth collapsed. So it is at then he talks about China. He says that this is a familiar story, and now the US government applies the same formula to check China's growth. And he mentions that the Belt and Road Initiative was launched in 2018, 13, but before that, there is a uh, so let me come back to this slide. Yeah, so he says that uh, Japan was looked upon as a competitor, and with regard to China, he says that the US began to look upon China as a threat rather than as a trading partner. And he draws the timeline. He says that it starts with Obama's Trans-Pacific Partnership project, specifically meant to exclude China. And it was a partnership with the Asian countries, if you all remember. And this continued under Trump and Biden. We all must have seen the sequence of, sanctions and counter sanctions by China, then the trade barriers and the counter trade barriers by China, and uh, and now we see in the Biden administration this has been intensified even higher. And so Jeffrey Sachs argues that China launched the Belt and Road Initiative in 2013, followed by in 2015 by what is called the Made in China 2025 to promote robotics, IT, renewable energy, and other advanced technologies. But earlier to the Belt and Road Initiative, China had already launched what is called the Global Development Initiative, which calls for inclusive development of all developing countries in the global economic process, and the Global Strategic Initiative in 2022, which deals more with security, the perception of threat from America, especially on the Taiwan issue. These all seem in retrospect either as an anticipation of the hostilities that were emerging vis-a-vis US, or as an adaptive strategy that China chose to follow. And These quotations are very important. He says that the US strongly denies that this is an economic war with China. But as the old adage goes, if it looks like a duck, swims like a duck, and quacks like a duck, it's probably a duck. So we see what happened with Japan, the same thing happening with regard to US merchandise imports from China, falling from 22% in 2017 to 19% when Biden is inaugurated, and 22 to 23 midpoints, you have it at 13%. This is what even Venkat was saying in his introduction to this presentation. And there we come to the main part of the story, which actually is perhaps also very important as much as China slowing down is. So Mario Draghi, who was the uh, European Central Bank chief for many years, and there is a EU project which is different, and there is an Euro project which is the currency project which the ECB is mainly involved with, which is different. And he had been asked by the Parliament, the EU Parliament, to prepare a report on the problems in Europe and how they can get out of it. And very interesting, you see the first line, and it is a 393-page report, and about 69 or 68 pages. A shorter version of the report is available on the internet, which I could find. And then there is an address by Mario Draghi just last week on 17th September to the EU Parliament, basically explaining what he has proposed in his report to improve the European competitiveness in the coming years. The first line itself says, you see, the foreword, Europe has been worrying about slowing growth since the start of the century. Various strategies to raise growth rates have come and gone, but the trend has remained unchanged. And this is a quite a surprising and a very shocking thing when we discuss about the narrative around China's slowdown in the world. So he goes on the forward where it lays out some of the points which are there in the main report. On a per capita basis, real disposable income has grown almost twice as much in the US as in the EU since 2000. So basically, Europe is lagging far behind the US in many respects. And this disposable income, real disposable income, is only a symptom of that. And Martin Wolf, whom I discussed before, he writes for the FT and more balanced and reasonable than other commentators who write reports on China. Draghi is trying to save Europe from itself. This is the headline that he gave on 17th September, the day when Draghi presented his report to the European Parliament. So he quotes from the report, if Europe cannot become more productive, we will be forced to choose. We will not be able to become at once a leader in new technologies, etc., etc. We will not be able to finance our social model, first of all. We will have to scale back some, if not all, of our ambitions. In some, the EU risks failure. So these are quite strong statements, given the assumptions and given the picture, given the idea that people we have about about European countries, about the EU, and in general the economic dimension of these countries. So this
Dr.
is from,
Sriram,
yeah,
another 5 minutes, and then you can wind up.
yeah, 5 6 minutes. Yeah,
Yeah.
we
Okay.
can wind up anytime we want because the story
No,
is
no.
almost told.
Yeah.
Uh,
5 minutes and then Q&A, basically.
yeah. So is within the mandate is in 2012 when Europe was in the height of the European debt crisis, which is another story in itself. It was called the European sovereign debt crisis, and it went up to 2018 from 2008 onwards, according to some, and probably it's still continuing. Because in 2020, an FT correspondent writes that the Eurozone is at risk of a debt crisis worse than the last one. So the 2020 figure for debt in the EU area is 84% of GDP. That is the average. So, but it's important to see the quote that from the FFT report by Martin Wolf. He says the aim is once again to save the European project that Mr. Draghi loves from what he labels an existential challenge. So let's quickly go to the next quotation from Draghi, where he summarizes the starting point is Europe is facing a world undergoing dramatic change. World trade is slowing, geopolitics is fracturing, and technological change is accelerating. In a world where long established business models are being challenged, where some key economic dependencies are suddenly turning to geopolitical vulnerabilities. Of all the major economies, Europe is the most exposed to these shifts. And then he proposes three main areas of, what can be done to remedy the situation. One is what he called to close the innovation gap with the US. So he proposes a EU-wide legal statute called the Innovative European Company. This status actually would provide companies with a single digital identity valid throughout the EU, and it is foreseen that these companies could then have access to harmonized legislation. Because the legislation across various countries varies, the operations of countries, especially with regard to innovation, the rules governing experimentation, etc., are different. And he calls for harmonization of that. Then he calls for what is called the joint plan for decarbonization, which is nothing but energy security, because they lost out after the Ukraine crisis began. They lost out Russia as the most important supplier of energy to the EU, especially natural gas. And Germany has been the most worst affected with, there are reports about the very rapid deindustrialization of Germany. So he says that this is something that we have to energy security is important, as well as other security, that is in the defense sector. So he calls for some more investment in defense, more harmonization within the European countries in the production that is required to maintain the defense sector. And but the more very important thing here he says is that, to be clear, this should be read by anyone as a not as a as a call for not as a call for blanket protectionism. Our priority is to do everything to make all partners comply with the WTO rules, including those who presently do not. And this is most likely a reference to America, the one which is breaking all the WTO rules. As Jeffrey Sachs also said that this was against. And then Draghi is calling for about 750 to 800 billion euros per year in additional investment. And he says that Europe faces a choice between paralysis, exit, or integration. Exit has been tried and has not delivered what its proponents hoped for. Paralysis is becoming untenable, and as we slide towards greater anxiety and insecurity. So what is left is only integration. So he's calling for more integration. Markets cannot deliver what is required. He calls for this EU superstate powers to be increased, especially with regard to external economic policy and with regard to harmonizing education, industry, etc. So Martin Wolf calls this the fragmented character of the EU with an over-regulated regime in industry. So that brings us to why Mario Draghi has been saying all of these. He's been saying all of this because the poverty rate, which is called at risk of poverty and exclusion, which means social exclusion, 2020 was something like 96.5 million. These are official figures. The real figures could be even 120 million. And it is about 21.9% of the population, not 22, but 21.9% of the population. We see very clearly here the German poverty levels by EU standards is higher than the average of for the whole of EU. And Spain, Greece, these are all more laggards within, they have serious problems within their economies, and this is shown up in these poverty figures. And now here, this is another figure which how they calculate this poverty using the indicators of severe material deprivation, very low intensity work in many households, and income poverty, which is a relative income poverty. That is, median income is what they take to calculate poverty levels. And this important figure is basically the evolution of poverty in between 2010 and 2019. Here you can see Germany, Spain, Italy, Greece, Portugal, and Sweden same or higher than the EU average in terms of poverty levels. Spain is the same level. Sweden has seen an increase to above 15%, and Greece has seen a reduction. And this is another view of poverty. This is another technical figure which we can skip actually. This breaks down the severe, you know, what is called severe material deprivation, at risk of poverty and exclusion, at risk of poverty, very low work intensity. These four variables are mapped here. They're all mostly stable if you see across the years, but this data refers only up to 2019. And then we come to the question of debt in the EU. So you can see very clearly that the average debt is about 88%. And then you have Portugal, Belgium, Spain, France, Italy, and Greece far above that, with Belgium, Spain, France, Italy, and Greece much more than 100% of the GDP. This is debt by GDP ratios. And this is the evolution of the debt by GDP ratios over 1995 when the EU was finally set up. And these on the right, you can see the highest figures are descending orders: Greece, Italy, Spain, France, Portugal, and Belgium. And we see a reduction in that. And I'm sure this will be a curious thing for people. This is basically coming out of post-COVID austerity, which reduced growth. But the more austerity measures also reduce social protection expenditure and therefore debt. Well, this is the
Dr. Sriram, you're there? Seems some issue at his end.
He's lost connectivity or what?
Yeah, yeah.
Hello.
Hello, yeah. Yeah, so we have to wait for him to get back.
So I guess we'll just wait till he comes back. I think we can't even start the Q&A since he's not around. So maybe you can take the opportunity to make some more cheerful remarks, Venkat. Just in response to what some of the arguments he made, and then maybe we'll have a discussion till he can log in back.
Yeah, but even, making comments on his presentation, which he has made just now, without his presence is a difficult thing. All that one can say is, as I was, listening to him, yeah, here he is. Yes, sir. Yes,
okay.
sir.
Can you hear me?
Yeah.
Sorry about that. This
Yeah,
is
yeah.
a very important thing anyway. So I think this, did I finish speaking about this particular graph? That the last part of it where you see a decline, this is because of declining growth in GDP as well as declining growth in social protection due to austerity measures that was introduced after the COVID, problem. So only one last three slides here, and this is about social protection in the EU area, which is actually what basically indicates the welfare state model, and you can see that uh, as a share of government expenditure, this accounts for about 36.6% is accounted in 1995, gone up to almost 39.2% in 2022. And within this, the social protection, the figures you can see on the graph. Can you see the graph? Isn't it's about 20% of GDP, 19.5% of GDP in 2022.
We
Hello?
can't see the graph. We can't see the graph
Doctor,
because the screen share is no more visible.
Okay, where is the screen share now? There you go. Yeah, now it's okay. Yeah, can you see now? No?
Yeah, that's fine.
Okay, so this basically this slide explains most of the thing. The spending on social protection is about varies from 7.5% in Ireland to about 23.8% in France of GDP. And this figure here tells you what it is. The social protection is one of the biggest expenditures of the government in overall expenditure. So this is we have come almost to the last slide now. So Draghi report says that per capita disposable income in EU have been half of what the US. They have grown at the rate half of that of the US in the last 24 years. Over productivity of the economy is going down. They need to intervene in innovation and technology, and they cannot depend on NATO for security, and they have to build up their own security networks. Whereas we have seen that China, on the other hand, is steadily catching up. So where is the slowdown here, and how do we understand this slowdown? So I end it by just one. Can you see this graph? I mean, this slide. This
Yeah.
was a 2001 book released again in 2011, which everybody knows in ICS. And here he says, the author, that my prediction that the Communist Party would fall by 2011 was wrong. Still, I am only off by a year. This he says in 2011. And this is another new book that has come out in 2023 called America is Headed. And the headline of the article is America is Headed Towards Collapse. And this author here argues that basically goes into why America has gone into a state of deep decline and how it is very difficult to save it, or what is all the reason behind that. He is raising concerns like the MAGA in the US, Make America Great Again. I think that I will end this presentation, and there's no time also. Thank you so much for listening to me.
Thanks a lot, Dr. Sriram. That was quite comprehensive. And it is very important that in this whole noise about Chinese slowdown, Chinese overcapacity, we need to, dig deeper. And as they say, the devil is in the detail. Thanks for, most of us, if not all, are not aware of the other arguments which in a very compelling fashion, oppose this whole story about Chinese economic slowdown and the drag it is going to have on the global economy. So thanks a lot. It was quite revealing, and I'm sure your talk will inspire most of us to go and find out various alternative explanations rather than getting carried away by the usual narratives. Which are seen in the print media and also the media which basically uh, sells a kind of a narrative which is more in favor of the so-called rule-based liberal international economic order. So please may I request anyone in the audience to raise your hand. I don't see any questions in the chat box. Quite heavy dosage of information that Dr. Sriram provided. Uh, we were hit by your, onslaught. Nevertheless, I would request the audience to raise your hand. You have the raise hand option. So please raise your hand, and
May,
if
may, may I
not,
just
then
May I just add that, if people don't have questions, at least people can comment on what they feel about this whole issue, and fill some gaps that may be in what I have presented. Or
commenting may lead to the Pandora's box. So we have Rapai sir. Rapai sir, yeah,
yeah, I
please come
hope
in.
Rapai has something to say.
Yeah, yeah. Rapai sir, please come in. Will you please, ICS, will you please unmute Rapai sir so that he can raise his question or comment? Yes, Rapai sir, please.
No, he's not.
I think
No,
now I'm
no, he's
unmuted.
on.
Yeah.
Yeah. First of all, thanks to Venkat and Sriram bringing out this. Is one thing I liked. It is the presentation that what we get the normal stuff from the media, and where one is trying to worry about whether China will go down and all of us will go down with it. That is one part of it. Secondly, I was looking at some of the defense narrative. Why they are talking about NATO suddenly up, with various things. I don't want to get into these things. Now the war is going on in Ukraine and these things. So the only one thing I looked at is the defense production, the companies, the major companies, even though there was a shortage of ammunition and things like that, but their profit margin has gone up. So I think, can Sriram make any linkages? Because these different two narratives. Thanks.
No, anybody who's been following the narrative of China slowdown and does not agree with that will also not agree with the narrative that is going on about the conflict in Ukraine. So there is on one side you have what is called unprovoked invasion kind of argument that history starts on the day Russia steps foot into Ukraine, whereas others have gone and seriously looked at the history of the whole issue and found that this NATO intervention has been going on in Ukraine for the past 20 years now, or even more than that. But I don't want to get into that issue because that is an entirely different controversy and a different story. But you're right. America's power in innovation, technology, etc., a lot of it comes from the defense sector, defense and space sector, for example. Whatever discoveries, whatever we use in our daily life, from cell phones to use of plastic to materials, everything, they've all been tested in the area of space exploration, satellites, in defense, and then the companies that patent it take the advantage and get into the consumer market. But what we have seen is in the last since maybe even since Vietnam, I mean, this is a warmongering hegemon called America, and you have seen so many wars around the world, regime changes, political interference, trade barriers, all kinds of things. And all this has only benefited the defense industry in China. That is the one industry that has grown very high. I don't have figures to show you just now, but even the NATO expansion from about 12, 13 countries to what now, 30 countries now, that is also aimed at expanding the market for American produced defense products. Because every country has to harmonize with NATO standards. And they can buy it only from America because Europe doesn't make it. Europe thinks that America will protect Europe. So there is a win-win situation there for Europe and America, which they assumed to be a win-win situation. But what has come out in this conflict for the past 2.5, 3 years in Ukraine is that NATO is not able to keep up with ammunition, not keep up with technology, and they are facing serious issues about production, about and there is a very very huge alternative media, what I call in social media. People who disagree with the mainstream narratives have all shifted to alternate media. So if you want to have a other side of the story, I think you cannot get it in newspapers or television or. And Rapa, you already forgotten the other war that's going on, what is called the genocidal war in the Middle East. So if you put everything together, the Iraq, Afghanistan, Libya, and the many, many interventions in South America by the US.
Huge issues in Africa.
Africa is in Africa. It is much easier. You create problems within communities, you create social strife, disruption. Then what happens is the group that controls the mines, the cobalt mines, for example, they will supply you with the cobalt at a much lower price than what it would be in normal times. So that is what has been happening, and this whole net zero, climate change, all these agendas that they have put forward, these all gel together with the alternate view about what's happening in the world. So your defense question, I think there is enough material in the alternate media, social media space. Not in YouTube. YouTube has very little, but there are many alternate video streaming platforms. There are many podcasts by experts, journalists who are basically pissed off with this whole state controlled and establishment media in all these countries, and they have moved on to other platforms, and there a very healthy and very open discussion about all these issues are taking place. People are digging up history, people are digging up documents, people people who were in powerful positions in the US government from Reagan's time or during Trump's time or the senior Bush, junior Bush, all of them, those who disagree with current US policy, foreign policy, they have all come out and they are spilling out the beans. They are telling you detailed stories about how policy operates in the US, how policy is devised, how it is implemented, and how it is not even good for the US itself anymore. It may have been useful for some time, but they say that this is bringing an end to the power of America in the global space. So,
Dr. Sriram, thanks for your response to Rapaisa's question. We have a young scholar here who has
yeah.
raised this question. His question is it's in the chat box. So, Chinmay, will you please do the needful?
Sure, sure, Professor. So this question is from Mr. Devdathan from Delhi University. His question is, was COVID the only sudden reason for the slowdown economy of China, or is there any other context?
No, you see, I showed you some pictures from graphs from BBC reports, and this slowdown has been happening long before, from 2005 onwards, I think, when the growth rate fell from some 7.8 to below 7, that is 6.4, 6.3. And if you go back to the presentation, it tells you exactly when this starts. The BBC report, it says that China's expanded at a rate of 6.6% in 2018. China's economy grew its slowest rate since 1990. So there is a figure here which shows that the 14.3 growth in 1992, and there is a 7.8% growth in 1998, but then it goes up again in 2008, before the financial crisis, to 14% again, but again falls to below 10%, and then below 8% in about 2012 or something, when the European debt crisis starts. And from that time onwards, 6.6% is quoted as 2018. But the problem begins much before. The trend is on the lower side. I mean, the growth rate itself is going down, the trend growth rate. If I can share the screen, then it might be, you know, easy for you to see the. I don't know. Again, I've run into this problem with this whole thing. This Zoom is quite a. Uh, can you see this graph?
Yes.
Yeah. So here you see how the economy is slowing down. So you see, here is 2011 or something. Then this is 2012, 13, 14, 15. You see, it's all going down, 16. And then what they say 6.8 actually happened in 2017 also. So it has been slowing down in a certain sense. And it is not a new story, but the new story starts in 2019, when you see, foreign policy, etc., takes time to, put in place. So 2018-19 is considered to be the point when this whole narrative starts about slowing down of China and then becoming a threat and then becoming, that they are stealing intellectual property and that they use non-market techniques, they break WTO rules, etc., etc., etc. The narrative follows. But the slowdown in that sense, in a purely technical economic sense, going below, I mean, slowing down of the growth rate itself begins somewhere in 2011, 12, 13 maybe,
Yeah,
starts.
it coincided with Xi Jinping coming in and the overheating of the economy because of the post
Exactly,
2008 fiscal stimulus, overcapacity was done. And so
exactly.
therefore, more of concrete. And so he used anti-corruption, a
Yeah,
lot
yeah,
of
yeah.
wastage and all that, leading to a lot of debt. So therefore, he called upon the Chinese economic policy makers to have the new normal, isn't it? And he said that now onwards, we should not be growing more than 6.5% GDP.
Yeah,
So
yeah. That is
that's
what
what,
even,
and it
even
absolutely coincides with Xi Jinping
yeah,
being
yeah, yeah.
elevated
No, all this
in
has a
2010.
background. I mean, the whole
Yeah.
thing is that issues need to be put in the historical perspective in order to get a better idea of what's happening, what is, how to comprehend it, basically. These are all big, big things that are happening, and they are not easily explained by simple, cause and effect. And there are many, many causes, many, many effects, and which one will become dominant in the next round, it's hard to predict. But by having a retrospective view, a well-informed historical analysis, like what Jeffrey Sachs says about Japan, even knowledgeable scholars have not been able to say openly that it is U.S. foreign policy that brought down Japan. And because I think you are not allowed to say that. I mean, you may lose your post as a professor, or you may lose. You have to keep up with the narrative, the establishment's narrative. So these are all coming out because of the Ukraine conflict and all the issues that are arising now.
So, Rahul has raised a question, but maybe, we are running out of time. It's already 4:30. So when Dr. Sriram is going to come again to make part two of his presentation, perhaps we can carry
This
forward
is your assumption.
this call. Yeah. So I think, please my request Chinmay now to, wind up today's Wednesday seminar.
Sure, Professor.
Yeah.
May I say just a few things? I mean, if you have any questions, you can always write to me. My email address
Yeah.
is in the ICS list. So if there are any clarification, you can always contact me. Write a common mail to everybody so everybody can participate. Thanks.
With this, we come to the end of today's seminar. We thank Dr. Sriram Natarajan and Professor G. Venkatraman for gracing today's seminar with their presence and for giving us their precious time. We also thank all the participants for joining us today. The video of today's discussion shall be available on the ICS YouTube channel. We would like to invite you to the upcoming Wednesday seminar scheduled for 9th of October 2024. Further information regarding the event can be found on the ICS website. You may also subscribe to our newsletter for regular updates. Thank you everyone for joining us today.
Thanks a lot. Thanks a lot.
Thank you. Thank you. Thank
Yeah.
you.